A contractor making $50,000 takes home less than an employee making $50,000, even though nobody touched the contractor's paycheck. That sentence breaks most people's brains, but it's how the tax system actually works. Here's what's happening. When you work in America, the government needs to collect income tax, Social Security, and Medicare from you. The mechanics of how that money gets collected and who pays what change completely depending on whether you're classified as an employee or an independent contractor. That classification determines which tax form you get: W-2 for employees, 1099 for contractors. And the difference isn't just paperwork. It's hundreds or thousands of dollars that either disappear before you see them or appear in your account now, but vanish later. Let's define the two. A W-2 is the form your employer sends you, and the IRS, every January summarizing what you earned and what they already withheld. You're an employee. The company controls when and how you work, provides tools and training, and you're part of their payroll system. A 1099 NEC is the form a client sends if they paid you more than $600 as an independent contractor. You control how you complete the work, use your own tools, and usually work for multiple clients. The IRS cares deeply about this distinction because it determines who's responsible for tax collection and payment. Think of it like buying a car. W-2 is financing with automatic monthly payments pulled from your account. You never see that money, so you can't spend it. 1099 is paying cash up front and getting a bill a year later for registration, insurance, and fees. You had all the money once, but now you owe a lump sum you may not have saved for. Here's how it works in practice. Imagine you earn $4,000 gross in a month. If you're W-2, your employer's payroll system withholds federal income tax based on what you claimed on your W-4 form. Let's say $300. They withhold state income tax if your state has one, maybe another $100. Then comes FICA, which is the combination of Social Security at 6.2% and Medicare at 1.45% of your gross pay. That's about $306. But here's the invisible part. Your employer also pays $306 in FICA that never appears on your pay stub. You see a gross of $4,000, deductions of about $706, and a net deposit of $3,394. The money's gone before it hits your account. Now, same scenario, but you're 1099. You invoice a client for $4,000. They send you $4,000. Nothing is withheld. Your bank account shows the full amount. It feels like you just made $700 more than your W-2 friends. You didn't. What actually happened is you now owe that $300 in federal tax, that $100 in state tax, and you owe self-employment tax. Self-employment tax is how the IRS collects both the employee and employer halves of FICA from you, because you're now both. That's 15.3% of your net self-employment income, roughly $612 on that $4,000. You're supposed to pay this quarterly using Form 1040 ES. If you don't, you'll owe it all in April plus potential underpayment penalties, usually around 0.5% per month on what you should have paid. So out of that $4,000, you realistically owe about $1,012 in taxes. Your actual take-home is closer to $2,900, assuming you saved correctly. That's $500 less than the W-2 worker from the same gross number. But wait, there's another layer. The W-2 employee might have health insurance premiums deducted pre-tax, reducing taxable income. Their employer might match 401k contributions, free money. They're covered by unemployment insurance if they're laid off. They might get paid sick leave, paid holidays, or short-term disability. None of those are legally required for 1099 contractors. If you're 1099 and want health insurance, you pay full price on the marketplace, often $400 to $800 a month for an individual. No work, no pay. No unemployment safety net. The freedom of contract work comes with the cost of funding your own safety net. Here's where people get confused. First misconception: 1099 workers pay more in taxes. Not exactly. You pay the same income tax rate. What's different is you're now paying the employer portion of payroll taxes that was always being paid. You just didn't see it before. Second misconception: I can just write everything off. Deductions reduce your taxable income, not your tax bill dollar for dollar. If you're in the 22% bracket and deduct $1,000 in legitimate business expenses, you save $220 in federal tax, not $1,000. You still spent $1,000. Third misconception: I'll just pay in April. The IRS expects quarterly estimated payments if you'll owe more than $1,000. Skip those and you're charged interest and penalties on top of the tax bill, turning a surprise into a crisis. Now the edge cases. Some employers misclassify workers as 1099 to avoid paying payroll taxes and benefits. That's illegal, and the IRS has a form to challenge it. Some people are legitimately both. W-2 day job, 1099 side freelancing. Your W-2 withholding doesn't cover your 1099 income, so you'll owe quarterly on the contract work. And in some states, 1099 income might actually result in lower total taxes if you can deduct a home office, business mileage, and equipment against high state income tax rates. But that requires meticulous record keeping and real business expenses, not creative accounting. Here's the system in plain terms. W-2 means your employer acts as a tax collector, withholding your income and payroll taxes every pay period and sending them to the government on your behalf. They also pay the employer half of Social Security and Medicare, cover unemployment insurance, and often provide benefits. Your take-home is smaller, but your tax bill in April is usually small or zero, maybe even a refund. 1099 means you receive gross payment. You're responsible for setting aside taxes. You pay both halves of Social Security and Medicare, and you're your own benefits department. Your checks are bigger, but you're holding money that isn't yours yet. The IRS will come for it. And if you didn't plan, that's when the same $50,000 salary suddenly feels like $38,000 instead of $42,000. It's not about which is better. It's about knowing which bill you're holding,